All right, so here we are. We're going to be looking at chapter 3, which is going to be transactions, okay? So in this case, this is where I'm going to be showing you how to actually properly journalize a transaction, all right? And how to actually know when and basically when to actually journalize and whether you need to journalize a transaction or not, whether it's in regards to the business or something else. Okay, so how are we going to take a look at this? So before even looking at a journal, right, we must set up what's called the chart of accounts, okay? And what the chart of accounts should typically look something more or less like this, where you have account numbers if you'd like, you're not obligated to, but basically it is a list of every single account that exists for you to be able to organize your transactions in a meaningful manner, right? Making a list of all the accounts that you can have, like a checking account and an inventory account or an equity account, an expense account. So any of those things, right? If you have a specific account. Now, of course, they're going to be organized in a specific order as well. Typically, your assets will come first, then your liabilities comes next, then it goes your equity, then it goes your income, and then it goes your expenses. So it has to be in that exact order. Why? I don't have a clue, but it helps at least keep your ideas separate. Again, you don't have to have it primarily in that order, but they do recommend you to have it in that order, that all your assets usually come first, then it goes your liabilities, equity, revenues, and expenses, okay? That's just how it is, right? However, basically, you need to have this in order for you to be able to actually properly journalize a transaction. An account must exist in order for you to be able to basically take a transaction and organize it, okay? Now, of course, like a chart of accounts, right, as we go through any type of business, right, we can't predict that we'll have all of these accounts existing, right? So again, the chart of accounts doesn't necessarily need to be completely done before you start your journal. You can progressively add as you go. But best recommendation is that you should at least have an idea of what accounts that you could potentially have or will use. But once again, of course, every month you're going to have different revenues, different expenses, right? So what if you started out your business with only selling one product, but as you progressively went through the years, you'll start selling more and more and more products, then you're going to have to add more and more accounts, or for any reasons that you incurred an expense that normally would never happen until now, then yes. So that's why the chart of accounts is always going to be also progressively growing, and you can add along the way. But the typical accounts that you would normally have would be obviously a checking account. If you're selling inventory, you're gonna have inventory. So these again, once again, you can't have a set amount of accounts that you can predict in the future of what you will have, but you should be able to make a list of things that you could potentially use right when you start your business, okay? So again, you're not obligated to use account numbers unless you feel that's the best way to memorize an account, because oftentimes, right, when you have thousands and thousands and thousands of accounts, right, you're more likely to actually be able to memorize a 5-digit code than it is for a whole entire account name, okay? So at least you're able to be aware of that. Now, again, we are using Excel, which Excel allows you to be able to do account lookups, okay, or word lookups when you, do the control find key. So it does make it a little more easier for you to be able to know which accounts that exist, okay? But in this kind of sense, like if it works best for you to use a account number, then use it. If not, you are not obligated to have an account number, okay? So account number will not actually be the reason why you have their items in order, because if you're consistently adding more and more accounts, then obviously those account numbers are going to be made up along the way. Okay. All right. So again, the chart of accounts is created by the accountant. Okay. It's created by the accountant, right? Not the bookkeeper. That means the bookkeeper is going to be given the book that they write their transactions on, whether it's a journal or it could be a specified one. We'll talk about that in the next slide. And they must be given a chart of accounts to know where to organize the information, okay? So let's finally talk about the general journal. Okay, so right now, this is what a journal should look like. Well, again, with all the black arrows, it's basically the key points I need to tell you about how you actually do manual bookkeeping if you are doing pen and paper, but this also applies for Excel as well. Okay, now a general journal is going to be a book where daily business transactions are going to be recorded. Okay, so in this class, right, we're only going to look at one general journal, and that's for every single transaction that exists within the company. Now, again, a company, depending on what it is, could have multiple positions, could have multiple books. So they could have one for just specifically for sales, one for for just business expenses, one for payroll, and one for inventory, right? They can have multiple books, but in this case, because I'm just telling you right now, we're going to be looking at all of those positions in this class. So in this class, we're only going to be using one general journal and one general journal only, okay? No other book exists except for just one general journal, okay? Where we're going to be recording all of our daily transactions for a business, okay? Now, if that's the case, right, we're recording daily transactions, first thing you got to do is you must put the journals in chronological order, meaning the date that it happened is the day that you're going to record it, okay? Best rule of thumb is try to do it every day, okay? Especially if you're the accountant or if you're the bookkeeper, right? And you're given a bunch of receipts for you to record. Look at the receipt because it's important that you keep it in the exact date, okay? So that's the number one rule there, right there, is that you must keep your transactions in chronological order, okay? Second thing that we're going to do now here is that usually how a journal is written is going to be based on the account number. So under description, right? Or not account numbers. The accounts itself, okay? So under description, your first rule of thumb here is you're going to be journalizing the exact account name, okay? Now, again, the rule here is debits usually are journalized first, and then your credits are going to be journalized after your debits, okay? Now, in this case, right, my debits are going to be left aligned, and that way you're able to tell, well, that's a debit. And your credit is going to usually be indented, okay? Have a little space in between, and then you're able to put your credit account on there, okay? In this case, rule of thumb is yes, for the journal, it must be word for whatever account is linked to your chart of accounts. So if it says furniture, you need to write the whole entire word furniture. If it just says cash, then you're just going to write cash, okay? Now, can you use abbreviations for the journal? Yes, you can. That is an exception to the rule, but obviously, if you're not the only one that's looking at your books, then you should generally use full words. But if you're the only one that's solemnly just looking at this book yourself, then yes, you can do whatever you'd like. If you want to use abbreviations, go for it. As long as you can make an association that when you make your abbreviations, it makes sense to you and to nobody else, okay? You can write rent or EXP, right? Rent expense is short for rent expense, right? Yes, you can. However, I'm going to be teaching you how to do it properly, so I'm going to be using the full words that are linked or that is on your chart of accounts. So if it says medium regular coffee, I'm going to write medium regular coffee, not MEDREGCO. Okay? No. I'm going to be using full words, okay? So, yes, and that's the rule here where your debits accounts are normally going to be left aligned and your credit accounts are going to be on the with an indent and with a space in between, and then you're going to go ahead and write your account number or account name, okay? Now, in this case, right, a lot of questions come into the play where, how do I know which accounts to debit first? And usually that's why rule of thumb is when we practice how to journalize, I want you to exhaust I just want you to make a list of all the accounts that you think you're going to be using first, all right? And then put it in order, right? Especially when we're using Excel, I'm not going to be, looking over your shoulder and say, no, you're doing it wrong. No, this is room for practice, and it also allows you to be able to, make those you could make changes to your Excel sheet at any given time, right? This is room for room for learning, okay? You make those mistakes just so you can learn, okay? Now, in this case, I'm not going to expect you to know which accounts are debits and which accounts are credits if you don't know what the transaction at hand is. So I want you to exhaust, break it down, list out all the accounts the way they are, all right? And then realize, oh, this is an expense account. They typically should be before my liabilities and equity and revenue accounts. Okay? If you could think of it that way, then you're able to do this a lot more easier and a lot more quicker because you'll be able to understand it a lot better. Okay? And of course, once you have that, then the next section is going to be the post reference, or in this case, oftentimes you'll see it as PR. PR is going to be if you use account numbers, okay, then it's going to be the account number that's linked associated to that account. Okay, so if you remember, let's look at cash or checking, right? If I look at my chart of accounts, it's account number 10100, and that's exactly what I posted right here is 10100 is my checking account, okay? Now, of course, you can be having multiple debit accounts with multiple credit accounts. So as you can see for this example, right here on January 5th, I am dipping into multiple debit accounts, linking only into one credit account. Yes, that's possible. It is very possible you can have a bunch of credit accounts and link it to one debit account, right? As long as you understand the rule of thumb here is that your total debits must match your total credits. So this is where we use the double entry system, right? If I'm putting money into one account, I need to have an equal and opposite transaction for that exact amount, okay? So this is where a little science is coming into play, right? If you have an action, you have to have an equal and opposite reaction. So in this case, if you have a debit, you must have an equal and opposite credit, okay? And of course, last but not least, when we end our journal, we need to have a description under the description so you actually know what this transaction was. So example, the first one, right? We actually purchased furniture from a shop, okay? Or for the shop, okay? In this case, right? That's exactly what we did on January 1st. And then the second one here is going to be paid rent for 3 months using check number 1501. This gives me details besides just knowing that I paid for rent. Wow. But why is it that I'm paying rent and I have prepaid rent? Because in this case, right, if I write my description, rule of thumb here is that your description, yes, can be under your description as long as you have parentheses in it. It could be italicized, it could be in smaller font, whatever means that you want to keep it, you could do it as long as it's in parentheses, and you can make your description as long as you want, okay? Usually, you'll have a vendor name, right? Because who did you write the check out to? I wrote it out to Landlord Properties to pay for 3 months worth of rent. Simple, okay? And those will typically be in parentheses. So then under your description, you know exactly what that transaction happened. Because if you didn't have a description, right, and I just wrote that I paid for rent and I have a prepaid rent and I wrote for checking, how would I know who I wrote the check out to? How will I know who I rented out from? And how do I know what the prepaid rent? I don't know how many months I paid in advance. So in that case, again, this is for not only for you as the person who's doing the bookkeeping itself, but what if your accountant must go over your books to make sure that you did your bookkeeping correct? Okay, and if that's the case, right, if other people have to look at your work, it's gonna be they're gonna look at your books and say, why, what is this transaction? This transaction gives me no information. All right, so again, a description is very, very, very crucial, especially also too if you are the person who's handling the books. Can you tell me 2 months later, 3 months later, when you look back at your books, would you know what that transaction was? Okay. Of course, in this case, no, you wouldn't be able to have that information. I'm so sorry. Um, can you hear that? Okay.
Yeah.
All right. Give me 1 second. I'm so sorry.
Yes.
Oh, yo.
Yes, yes, you can.
Yeah. Yes.
All right. So going back to this, that is how we would properly journalize a transaction. Okay. So this is the rules on how to journalize. Okay. Any questions so far in regards to this?
No.
Okay. All right. So let's talk about transaction analysis. Okay. What is so important about the 7 steps for transaction analysis? Okay. This is definitely for those who are beginner users of accounting in general, right? How do you know when to journalize a transaction? Okay, well, here you go. You here have all these 7 steps to understand transaction analysis. Okay, so of course the first thing that you're going to be doing is you're going to recognize that a transaction has occurred. So again, by doing that, you're going to be collecting source documents, right? Proof that a transaction had actually occurred. So whether it's a sales receipt, whether it's an invoice, a bill, all right, that is proof that a transaction had occurred. Now, how you take that piece of information and recognize, well, does this affect my business? Does it affect my personal life? Or how does this transaction affect anything in general, right? And that will determine whether you are going to either record it for the business or record it for your personal life, okay? So that's the idea here is recognizing that a transaction has occurred and how it affects the business, right? By providing the source documents to as proof that a transaction has occurred. Then you're going to understand how that transaction, again, affects the business, right? So now that we recognize that it has happened, we have proof that it happened. Second is, how does it affect your business, right? Did I spend money to buy something? And if I bought something, what did I buy? Is it something that I purchased for the business as an expense? Or is it something I purchased for the business as acquiring an asset, right? Did I purchase furniture, which is an asset, right? A fixed asset. Did I purchase inventory, which is considered a current asset? Did I get a loan, right? How does this transaction, this source document tell me with that proof of that transaction has occurred, how does it affect my business? And that's where you have to analyze what accounts are you going to maybe predict to use for understanding how to organize the rest of your transactions. So understanding what accounts are going to be affected. right? And then step 4 is going to be using the chart of accounts that exists in your books. So if you know that, let's say you bought something, you bought supplies, okay? So that's a current asset and you spent money, right? So if you understand that much, right, then you know that these are the accounts that are going to be affected, which is your supplies account and your checking account, right? Because you spent money in order to get supplies. So you're going to check your chart of accounts to confirm that those accounts exist. Because if they don't exist, then you're going to have to tell your accountant that you need to create this account. Or the accountant will tell you, we already have an existing account. It's going to be under supplies or business supplies or whatever account that they created the chart of accounts for. Okay? And then once you get that far, then step 5 is going to be come into play where you need to understand the debit and credit system. Okay? So in this case, right, this is where your accounting model is going to also come into play, right? I spent money to buy supplies. So therefore, I increase my supplies, but I decrease my cash flow because that's how it is, right? So in this case, I increase my supplies, which is an asset. So I use the debit, but I decrease my cash flow, which means I must have credited my cash. Okay? And then step 6 is going to be determining which book you're going to be putting this transaction in, which in this case it's given, right? We only are going to be learning for one book in this entire class, which is just the general journal, right? Not general journal for expenses or not general journal for inventory, right? It's just one journal and one journal only. And then step 7 is going to be exactly what the Nike logo is. Just do it. Record the transaction in that book. Okay? So any questions in regards to the 7 steps of transaction analysis? Okay. I would have, oh, go ahead. So I would actually,
No.
go ahead, yes.
No, I was just about to say no.
Okay. So in this case, right, if you guys are beginners or not really knowing whether to journalize a transaction or not, I would recommend you to print this exact slide right here, just so then you can apply it to either real life or as an example, right? Go out into the real world and go buy something and think about it. Take that receipt and apply the 7 steps of transaction analysis to real life. Okay, so in this case, it's a personal transaction. I bought something for myself, right? I bought groceries for the family. That is a personal transaction, okay? And et cetera, right? So again, I would also recommend you to have this for the rest of your class too, in case for any ways that you need to help you journalize a transaction, okay? This is very crucial. It also goes in line with the accounting cycle, which we will talk about tomorrow. Okay? So then correcting entries. So of course, right, we come here to learn how to properly journalize. So therefore, we will be making mistakes left and right. Okay, this is room for learning. And we're not in the professional world where if you accidentally make an error, right, you just get lectured and et cetera, right? This is room for learning. So for any reasons that you make a mistake, an error, we have the technology where we can just simply delete the transaction and start over, okay? I want you to use this class as a room for you to learn and to make all the mistakes that you can now before going out into the professional world, okay? Now, of course, when we talk about correcting entries, this is typically for more so if you're doing manual bookkeeping where you are writing all out your transactions, okay? So in this case, right, rule of thumb here is you should not cross out, scratch out, delete, white out, I don't know, whatever ways that you could try to, remove a transaction. you actually are not supposed to do that, because that is also where you could have the possibility of frauding the company, right? Even if you think it's just a minor mistake, other people that look at that transaction, they're going to be like, well, you scratched out a transaction because you made a typo. Okay, even if it's something as small as making a typo. Maybe you put the number in incorrectly, so you try to scratch it out and put a different number in there. No, because in the eyes of either the IRS or whatever, they're gonna take a look at that and they're gonna be like, "Oh, you're trying to fraud the business money, aren't you? By saying you bought $56 worth of supplies when you really bought 65, and you're taking that extra $9 of supplies and keeping it for yourself." Okay, there's many reasons, especially when it's sensible data to the government, because they can take a look at that transaction and interpret it in any ways and make it your fault. Okay, saying you're trying to fraud the company. So that's why the best way to undo a transaction is to either use one of these methods, okay, which is going to be the reverse and re-entry or the error cancellation method. So again, the reverse and re-entry, basically what you're going to do is, if you made a mistake, whether it's numbers or the wrong account, what you're going to do is you're going to reverse the entry by undoing the transaction, and then you're going to add a second journal entry to record it the correct way, okay? Where error cancellation only requires one journal, and that's to basically find the difference between the two accounts and put in a journal to either edit the information, not edit information, to add a journal to say that I forgot this or I need to take out this. Okay, now I'm going to show you an example for both of them. So let's go ahead and do the very first one, which is going to be the reverse and re-entry. Okay, so in this case, right, it is September 15, and you purchased office supplies with cash, okay? With the amount of $65, okay? Now, in this case, okay, sales tax is also included, okay? And then, of course, you recorded your transaction as 56, right? Again, so now let's go ahead and correct this error. So in your books, you recorded it exactly like this. You said that you bought office supplies with cash for $56. But then maybe a couple days later, you realize, oh, wait, that's not right, because I looked in my pocket. I had $70. I only have $5 in my pocket instead of having whatever it is, the difference between that, okay? So in this case, right, you figured out, wait, let me double check my receipt one more time. And then you see that you made a mistake. You made a typo error saying that you put $56 into office supplies and you only spent $56, when in reality you spent more than that. Okay, so how do I use the reverse and re-entry? So let's take a look at it this way. Okay, if I was actually physically going to the store, or let's say we went to Office Depot and I actually purchased the office supplies with cash, right? Now in this case, to reverse the entry, I simply just go back to the store and return the supplies, okay? So I'd be getting my money back, and I would also be returning the office supplies, okay, for the incorrect amount, which is the $56, right? Now, what I'm going to do is I'm going to go back to that same store and go back in line and repurchase it by adding my second journal, which is going to be putting in the correct journal with the correct amount. So that's called the reverse and re-entry. So in this case, right, I returned the supplies and then I bought them back for the correct amount. And then, of course, your little description is going to say to correct the error that you did on September 15. Okay? So again, that's how you use the reverse and re-entry, right? You're going to undo the transaction, and then you're going to redo the transaction, but this time with the correct amount, okay? So that's the reverse and re-entry. Now let's talk about the error cancellation. Now in this case, this is what you have to do because this is where you have to really think very carefully, okay? In this case, my top one is my original, right? I have $56 worth of office supplies and I spent $56. Now, in reality, that's not true because you have a receipt that says you actually spent 65. So what you actually have to do here is you have to kind of think to yourself, right? What's the difference between the amount that I put in my journal that was incorrect versus the amount that I should have journalized it, right? So in this case, what's the difference between 56 and 65, right? Find that difference. Okay, it's $9. Okay? Now I have to think, am I missing $9 of supplies or am I supposed to be getting back am I missing $9 worth of supplies or am I supposed to get back $9 for cash? That's the part where a lot of times, especially beginner users, they can make another mistake by correcting this right here by saying, I should have $9 more in my hand instead of saying $9 more in office supplies. But in this case, right, I have $56. I need to increase my office supplies by $9 in order to be able to make it from 56 to 65. So in this case, that means I'm missing $9 of office supplies and I'm also missing $9 of cash because I've already spent it. So therefore, that's the error cancellation. You're going to find the difference between the two numbers of error that you made here. And then you're going to think about which account is over and which account is under. Okay, so in this case, both accounts are under, right? I recorded them as under instead I need $9 more. Okay, so that is the error cancellation method. Okay, now rule of thumb here is best accurate way or a more common one would be the reverse and re-entry, okay, for beginner users of accounting, okay? If you are a more professional at it, yes, you could do the error cancellation. It might be easier to you, but it might not be easier for someone else because, again, the error cancellation can cause you to make more errors into your journal than you already had. You had a first mistake and you can possibly make a second mistake again, and then you have to undo and recorrect it again. So for this class, I do need to make sure that you guys understand both of them because whichever one that you find easiest, right, to fix a journal entry. But for most cases, I would recommend to use the reverse and re-entry because you actually get to undo the transaction and then put it in again with the correct amount. So instead of having to guess and pick which one and have to think about which one was under and which one was over, that way, all you have to do is just figure out which account, or in this case, you just reverse the entry and just enter it in correct. Okay? Any questions in regards to the different types of methods that you can create to edit or to fix an error in your journal?
No.
Okay. T accounts. Now again, T accounts is something that you can do just on a quick, if you need a quick sum of something. So when you notice that your journal, right? Your journal basically is a list of daily transactions. If you're using multiple accounts and and other accounts in there, you're not actually given an account balance. All you're given is just what happened that day. So what a T account does is it allows you to go on the side of the journal and it lets you do a little quick calculation, okay? Now, in this class, I'm not going to require you to understand or know what a T account does, but it's just basically a quick math on the side to total up the amount of, cash in a specific account. So if you had all these transactions and you were kind of figuring out how much cash do I have? Well, if I started out with $5,124 and I spent $500 here and then I spent $65 here, how will I know how much I have? So in that case, you go on the side of your journal, you write it out. All right, so I have a debit of this, I have a debit of this, I have credit this and credit this. So therefore, I should have a total of $4,713 left. Right? It's just a quick math thing. So as far as that, in case you are wondering what my account balance is, well, in this case, we have what's called a general ledger. All right, so instead of having to do that quick math on the side of your journal, you have what's called the general ledger. The general ledger is another set of books that allows you to have account balances in every single account that's in your chart of accounts. So it's a list of every single account that you have with the respective account balances. And here's the difference. They look identical to a general journal except one difference. There's 2 extra columns on the side that gives you your account balance. Okay, that's the difference here. And when we learn about the accounting cycle, once you complete the journal, your job is to post it to the ledger. So then at any given time, you know how much account balance you have at all times. Now, this is most important, especially when you are using your checking or cash account. Because rule of thumb is you need to know how much money you have at all times. You can't just be spending money point blank left and right without knowing how much cash you have in your bank, right? Because that would be very, very bad accounting. Because you could say, oh, I roughly have $50,000. I'm just going to charge this, charge that. No, that's not the best way to do accounting, especially if you're working for a company. You need to know how much money you have in the bank at all times, so then you're able to process your checks, right? Pay for this expense, pay for that expense, pay for your employees, pay for the water bill, pay for the rent, pay for this. You need to make sure you have enough money to be able to make all those payments for all those expenses. All right, and the best way to do that is by going into your general ledger account. In this case, here's an example of my cash ledger account, right? Here, I set that on, the 31st of August, right? I started out with $5,124, right? I had a sale, which increased my bank account by $154. So therefore, I add that to my checking account. So now I have $5,278. Then on September 2nd, I bought something for $500. So therefore, I put it in here, and therefore it decreased my account. So now I only have $4,778 left. And then I went on September 3rd, I bought office supplies for $65, which dropped my cash account down to $4,713. Okay? So here is the huge difference between the general journal and the general ledger. The general journal is just a list of all your daily transactions and what happened and what accounts you used. Your ledger is the same exact thing as a general journal, except it has respective account balances. That's the only difference. Okay? They're identical in looks, but the only difference is that the ledger has another column to let you know how much your account balance is at all times. Okay? Any questions in regards to the ledger?
No.
All right, course review. We talked about what a journal is. We talked about what a chart of account does. We talked about the two different types of correcting entry methods, right? The error cancellation and the reverse and reentry. We talked about the difference between the journal and the ledger, okay? And we talked really briefly about T accounts. So let's go ahead and dive right into the chapter 3 exercises, okay? All right, so number 1, what is the chart of accounts?
It is a list.
A list of what? Hello? Anybody else?
Did I cut out?
Yes, you did.
It's a list of numbered
Oh,
accounts.
Numbered
I
accounts.
I already have the answers, so I don't want to be participating because I already have these answers.
Okay, that's fine.
Okay. All right.
okay. Oh,
Yes, you did cut out, Brian.
damn it. Okay. It is a list of all the accounts used in your general journal to record all your transactions.
Excellent.
Your,
Excellent. Okay, so used in the general journal. Give me a second to type that in. Using the general journal. On a list of all the accounts used in the general journal.
to record
Yeah,
your
yeah, yeah.
trans.
To record all business transactions. Excellent. Good. That's correct. Okay. What is a general journal?
It's the accounting record that is used to record the different types of transactions.
Good. Accounting
Like
record.
your financial diary.
Perfect. Good. Right? It is ooh, my typing is so bad. Accounting record for all business transactions. Okay. Again, other words, it is a business diary. Good. Whoa, diary. Excuse my typing today, man. This business diary. Okay. All right. So then, what is a general ledger?
It's all the accounts, like entirety. I don't know if entirety means like the full name.
Full name. That would be a chart of accounts.
Okay, so it's the manual system or computer file containing all the account balances and activity for all the business assets,
Good.
liability, equity, revenue, and etc.
All the accounts with account balances is what I was looking for. Good. Good. All right. What are the 7 steps of transaction analysis? So what's the first one?
Recognize the transaction.
Okay. What's step 2?
Understand the transaction, that how it affects the business.
Okay. Step 3. Oh, wait, no. Step 3 would be how it affects the business. Determine how transaction affects business. Okay. What's step 4?
The chart of accounts
Mm-hmm.
to determine the account numbers.
Okay, so I'm gonna write chart of accounts for short. Chart of accounts. Okay. What's step 5?
I use the debit and credit rules.
Mm-hmm. Okay. And step 6.
Determine which journal is going to be used, or what journal should be used.
Mm-hmm. And then last but not least, what's step 7?
Just do it.
Record
Yep.
the transaction.
Do it. Right? Just do it. Record transaction in journal. Good. Right? Number 5, okay, how is the general journal recorded in terms of time?
Is that like the steps or?
No. In this case, in terms of time, like when should you journalize a transaction?
That day?
By day, okay? By date, which is also known as chronologically. Chronologically. Okay? Right? In order by date. Okay? All right? Okay, when recording a general journal, what goes first? So this in terms of
The date.
accounts. Go ahead. What was that?
The date.
Okay, we already talked about that one in step 5.
Oh. Oh.
So this is in terms of accounts. Like in this case, when I journalize my journal, which account do I put in first?
Oh, the debit. The one that is debit.
Good. Debited accounts go first. So debits go first. Okay, and credits go last. Okay. Good. And then at the end of journalizing, what must be true?
Debit equals credit.
Good. Your debits must always equal your total credits. Excellent. Good. Okay. And number 8, what are the 2 methods of correcting a journal entry?
The reverse and reentry and error cancellation.
Error cancellation. Good. Excellent. Okay. Good. Okay. So here, in question number 9 here, we're going to practice recording the following transactions in a general journal by using the chart of accounts. So this is where I'm going to have you guys practice recognizing, using the transaction analysis and the rules on how to journalize a transaction. We're going to be able to apply it here. So in this case, here's my chart of accounts, okay? The left side is the account number. The middle is right here going to be the account name and then what kind of account type it is. So it's a little mini chart of accounts for you, okay? And here I have a list of transactions that we're going to put in our general journal down below. So let's take a look at our first one here, okay? So let's go ahead and practice, okay? So on January 1st, okay, you paid rent for $500 cash. Okay? So in this case, I paid rent with cash. This is also where you need your accounting model to determine to using how to use the debit and credit system, okay? So in this case, right, I paid rent $500 with cash. So let's take a look. Step 1 in the transaction analysis. I recognize that a transaction has happened, right? Maybe I paid rent for the building that I'm going to be having my store in, right? So it does affect my business. Now, let's take a look at step 4. What accounts am I going to be using?
Cash and rent.
Cash and rent.
Cash and rent.
Good, excellent, right? We're going to be using the cash account and the rent expense account, right? So account number 100, which is cash, which is an asset, and then account 660 for rent expense. Okay? So now let's go ahead and go into step 5. How do I use the debit and credit system? Well, let's think about it, right? I paid $500 for rent. Now, in this case, did I increase my rent or did I decrease my rent?
You increased.
You increase, and how do I increase an expense?
Debit.
You debit it. Now, let's look at this second account, which is cash, right? Did I increase my cash or did I decrease my cash?
Decreased.
You decreased it. So that means, do I use a debit or do I use a credit?
Credit.
Credit, right? Credit decreases my asset. So that's exactly what I have to do. So first one here is I need to put in the date, which is January 1st, okay? I recognize that I had rent expense and I'm going to debit my rent expense, right? So PR, rent expense was $660, all right? And because I recognize I'm going to debit my account, I'm going to debit my account for $500, okay? And because I used cash to pay for it, right, which I already know, I'm going to credit my cash account, right, because I spent money. I decreased my cash flow. So therefore, I'm going to decrease my cash flow by $500. And there you go. I have my rule of thumb, which is my debit is equal to my credits. I put my debit first and I indented for my credit account. The date is there. Description is optional, but for now, I just want to make sure that you get this part first before we add any descriptions, okay? So good. Excellent. So let's take a look at the second one, okay? On January 5th, you decide to purchase inventory of 100 items for $1 each with cash, okay? So in this case, which accounts am I going to be using? Because I bought inventory, obviously, for my business. So in this case, which accounts am I going to be using? I purchased inventory with cash.
150 and 100?
150 and 100, right? Inventory account and my cash account. Now in this case, right? Step 5. Am I increasing my inventory or am I decreasing it?
Increasing.
Increasing. So am I going to use a debit or a credit?
Debit.
Debit.
Debit, because it's an asset, right? I'm increasing my assets by buying more inventory. Now in this case, and I'm my second account, which is cash, right? Am I increasing my cash or am I decreasing it?
Decreasing.
You're decreasing, right? Because you spent the money. You no longer have the cash in your account, right? You spent the money. Now in this case, so we have determined all of those factors. So we have the transaction happen on January 5th, right? We have inventory, which we know is going to be debited, okay? And then we have our cash account because we determined that we spent the money, okay? Now, in this case, right, let's take a look at my information. How much cash did I actually spend?
$100.
$100 because I bought 100 items that cost me $1 each. So in grand total, I spent $100. Right? Good. Okay, good. All right, so let's see the next transaction. Okay, on January 8th, you purchased a machine for $750 with cash. So in this case, I bought a machine and I bought it with cash. So where would machine be placed?
160 and 100.
160, right? Machine would be considered an equipment, right? Because this machine is obviously, why would I buy a machine for the business, right? It's the purpose of it is to operate my business. So in this case, right, machinery would most likely fall under a fixed asset, right? It's not going to be land or anything like that. It's not going to, we don't even have land in my accounts. We only have equipment. I didn't buy a machine for inventory, did I? Not necessarily, but in this case, I'm not going to sell my machine. It costs $750. So in this case, I'm going to associate it as an equipment. Now, did I increase my equipment or did I decrease my equipment?
Increased.
You increased it, and it's an asset, right? So you would probably most likely debit the account. Now, how did I pay for it? I paid for it with cash, right? Now, did I increase my cash flow or did I decrease my cash flow?
Decreased.
You 100% decreased it. So again, January 8th, right? I acquired equipment, right? Which was account number 160. And I purchased it for $750. Okay? And I spent cash, right? So there I indent, which is account 100. And I bought it, spending it with $750. Okay? All right, let's see what happened next. Then on January 10, you purchased supplies for $56 on an account. I bought it on an account. What does that mean?
Account payable.
Account payable. Excellent. That means you bought it on credit, right? As in someone lent you the money and said, hey, purchase it on an account and you can pay me back later. So if that's the case, I bought supplies on an account payable. So let's take a look at my chart of accounts. Do I have supplies on here? Yes, I do.
Yes.
Do I have an accounts payable?
Yes.
Yes, I do. So in this case, I'm going to be using supplies and accounts payable. So account number 110 for supplies and account 200 for accounts payable. Now in this case, did I increase my supplies or decrease it?
Increase.
Increase. And you would normally increase assets with a debit, right? But what about accounts payable? Am I increasing my amount that I owe, like debt, or did I decrease my accounts payable?
You're increasing it.
And how would I increase a liability?
With credit.
Excellent. So in this case, I bought supplies on an account on January 10. So I have supplies. Account number 110 for $56. And then I bought, and it was on an accounts payable, which was a liability for account 200. And because I increased the amount that I owe by $56. Good, right? Let's see what else happened next. So we have a couple more transactions here. So then on January 12th, I had cash sales of 25 toys for $5 each, no sales tax. So therefore, I sold 25 toys for $5 each. So in this case, right, what happened here? I had cash sales selling 25 toys at $5 each.
410.
410, right? I had a sale. Okay, now what did I get out of the sales?
$125.
$125. Now, what account should I put that in?
In cash?
You put it in cash.
Would it go on?
Where? Go ahead. What was that? Where what else would you put it in?
No, thanks.
So good, right? The key word here is I had cash sales. So that means when I sold something, I received cash. So therefore, it's going to affect my cash account. Now let's understand this. Did I increase my cash flow or did I decrease my cash flow?
Increased.
You increased it. And how do you increase an asset? With a debit. Now let's take a look at my sales. Did I increase my sales or did I decrease my sales?
Increased.
You generated revenue, right? You sold something, so therefore you increased your sales. And how do you increase a revenue account?
With the credit.
With a credit. So good, excellent. So here I received cash, right? And I increased my sales account, right? I think it was on January 12th, okay? So therefore, account number 100 and sales was 410. Now in this case, I sold 25 toys for $5 each, which was calculated as $125. So therefore, I increased my cash flow by $125. Okay? Good. So now let's talk about what happened here. So on January 12th, I need to adjust my inventory, right, for the cost of the items that I sold. So in this case, right, I do have inventory, right? How much is in my inventory right now? If I purchase inventory on the 5th, right, I purchased inventory. I had 100 items, and now I sold 25 of them, okay? So this is where I'm asking you, right? You need to adjust your inventory because you got rid of 25 of those toys. All right? Now, how much did it cost you to sell those items? What did you originally buy those items for?
$25.
Yes.
100 items for $1 a piece, but for the 25 toys, $25.
Correct, right? You purchased each and every single one of those toys for $1 each. And in this case, you sold 25 of them. So therefore, you got rid of 25 of them. So in this case, it cost you $1 each for 25 of them, so $25. Now in this case, what account am I going to associate understanding how much it cost me to sell those items?
Is it cost of goods sold?
Correct. All right. I don't know if you're.
wow.
I don't know if you're hearing me, but I'm really emphasizing what account would I use to calculate the cost it took me to sell. Cost of goods sold. Right. Excellent. Cost of goods sold is directly correlated to inventory. So in this case, if I'm adjusting my inventory, what other account am I going to be using? Because right now, right, I sold stuff. I got rid of my inventory. So what other account am I going to be using?
would it be inventory?
Correct. Good. So, right in the very beginning, we increased our inventory, right? So now that I sold and got rid of stuff, right? Am I going to increase my inventory or am I going to decrease it?
Increase it?
You're decreasing it, correct. So in this case, it's going to be cost of goods sold, right? Because what did it cost you to sell those items? Well, we already figured that out, right? Cost of goods sold, which is account number 600, okay? It cost me $25 to sell my inventory, right? And of course, because it's directly correlated to inventory, I need to decrease my inventory to reflect that I no longer have 100 toys. I only have 75. So I need to subtract this 25 toys out, right? Which, how much did it cost me? It cost me $25, right? Because I got rid of 25 toys, which cost me $1 each. So that's how I update my inventory is, well, now if I have my ledger on me, I can say that I started out with 100 toys, now I'm left with 75. Okay. All right, last but not least, okay, on January 15th, you borrowed $5,000 from the bank. So, what account am I going to be using if I borrowed money from the bank?
Loans.
Mm-hmm. Loans, and what was the other account? So we got cash, right? When you borrow money, what does that mean? What do you have? You have cash. Exactly. Exactly.
Increase assets.
Say that again.
Increase assets.
Yes, you would increase your cash flow, right? Because you borrowed money.
Yes.
And when we look at liabilities, right? So are we increasing our cash or are we decreasing our cash? In this case, Magdi said you increase it, right? So you would debit this account. Now, in this case, I owe the bank money. Am I increasing my liability or am I decreasing my liability?
Increasing.
You're
Increase
increasing.
liability.
And then therefore you're going to, what would you, debit or credit the account?
Credit.
You would credit the loan account, correct. So in this case, we're getting cash and we have a loan, okay? Account number 100, and I believe loans was 250, and this is on January 15th. And again, we increased our cash flow by $5,000, and of course, we also increased the money that we owe to the bank by $5,000. Excellent, excellent, excellent. Okay, good. Last but not least, let's go ahead and finish this real quick. We had an error done in our journal. So using the transactions that was done on January 10, okay, you recorded that the supplies were $56 on January 10, okay? But then on January 20, you realized you made a mistake, okay? That it was an error and that you actually purchased $65 worth of supplies. So go ahead and record the correction using the two methods. So the first one we're going to do is let's do the reverse and reentry, okay? So here in my journal, I recorded that I purchased supplies for on January 10th. I purchased them on an account. So if I purchase it on an account for $56, right, it's right here. How do I use the reverse and reentry? So again, this is January 20. How do I reverse this entry?
You debit cash and then credit off it, the
Accounts payable.
You do accounts payable because you bought it on account. Okay, so you would reverse that. And I bought supplies. So in this case, accounts payable, which is account 200 for $56, right? I'm reversing my entry saying I am returning the supplies, right? For the incorrect amount. Supplies was 110. Okay, $56, okay? Now that I finished that, right? Now I need to do the re-entry. So what is the re-entry here?
It would be the same as above, right? But we do it for 65.
Correct. You would do supplies in accounts payable, okay? But this time you're going to put it in the correct amount. So instead of the 56, you're going to put 65, okay? And of course you can add a message here to saying to correct the error on January 10th, right? Good. So let's do the error cancellation method, okay? So in this case, right, it's you can only do one or the other. You can't do both because then you'll have a double error in your in your journal because you corrected it and then you're recorrecting it. So then that's too many errors. So you can only choose one out of the other, but in this case, I'm testing you on both methods. So whichever one that you're comfortable using, you would use. So in this case, right, let's say I didn't do the reverse and reentry. How do I do the error cancellation method? Okay, so again, I purchased office supplies on an account for $56. But in reality, I looked at my receipt again and I actually paid $65. Okay, so how do I use the error cancellation to fix this?
No, you do accounts payable, or wait.
Okay. Now let's go ahead and first determine what's the difference between the $56 that you originally recorded and the $65 that you should have recorded. What's the difference between the two?
$9.
It's $9 difference, right? Okay, so now we need to understand, right? Am I short supplies or am I do I have too many supplies? Do I owe more money or do I owe less money? That's
I owe more money.
you owe more money because in this case, right? You only recorded at 56. You need to owe more money. So and therefore, I need to increase my accounts payable account because I owe more money. I owe $9 more. Okay? However, what does that look for my supplies? Am I short in supplies or do I have too much
No.
supplies?
Too many.
Too much.
You only have $56 worth of supplies and you need 65.
Yeah.
So you have too much supplies?
No, well, I thought we had all the
Yeah.
supplies. We just
Had
recorded.
the incorrect amount of money.
Right,
Yeah.
right. I'm doing an aspect of yeah. Okay, I see where you're understanding it. In this case, right, I bought $65 worth of supplies instead of $56 supplies. So am I short in the value of supplies or am I short or am I too much over in the value of supplies? I only have $56 worth of supplies right now.
Short
You are short.
value.
Short in value. Yeah. So in this case, I need to add $9 more in value to my supplies. Okay.
Also, teacher.
Yes. Yes. Go ahead.
Supplies, it is assets. Increase assets means debit.
Mm-hmm.
Debit means increase.
Correct.
That's confusing.
Okay. Okay. Go ahead. How is it confusing? Go ahead.
I think I'm stuck on where when we purchase the supplies, the difference, what we had incorrect was just the money, not the amount of supplies that we received, right?
Yes. In terms of
Okay.
value, yes.
So now, so when we're short of supplies, it's just because of the what we spent.
Yes, correct.
I'm confused there.
Okay, yeah, so I see where that when I said that went wrong. So in this case, right, it's the value of the supplies, right? Because my original, I said that I bought 65, right? That's the original plan, but I recorded that I valued my supplies at $56 and that I owed only
Oh.
$56.
So that has nothing to do with the quantity.
No, absolutely not. No. No. No.
Okay, I think I'm good then.
Yes. So in this case, right, we're not increasing the quantity of supplies, we're just increasing the value. Because in this case, right, nowhere have I said that the supplies were discounted, or nowhere in there I said that the supplies were, short sailed or whatever. We bought it on a discount, or we bought it, what is it? We bought it used, okay? So in this case,
Okay.
the supplies are not discounted. In this case, I bought $65 worth of supplies, meaning maybe paper, pens, or whatever, right? But in my books, I recorded it as 56, meaning I only have the quantity, my paper, pens, and stuff, right? They're all the same, except I devalued it by saying it's $56 worth of supplies. Okay?
Okay, I get it.
And now I need to fix it because in reality, my supplies are much more worth than $56. There's actually $65 worth. So in this case, that's how you do it. So Magdi, is that the question you were asking?
Me, I said that supplies increase means debit.
Correct. Did I not debit this account?
Yani you put debit $9 in debit means supplies increase.
Correct.
Thank you.
Okay. All right. So in this case, right, we didn't buy more supplies. We just didn't put the price point of the value of the supplies that we bought. Okay. We didn't buy more. We just didn't put the price point exactly what it should be. All right. So, all right. Good job, everybody. Okay. Any other questions in regards to chapter 3?
I just